Hey traders, welcome back to this week's stock market forecast. We're going to be looking at the best opportunities in the global benchmark indices to the long side and the short side heading into next week, before moving over to the US stock market and looking at some of the best stocks to buy now and some of the best stocks to sell now in the US stock market. Okay, so kicking off with the portfolio selection for the global indices heading into next week, you can see it's really the US benchmarks that are outperforming, and these are the markets we want to be primarily looking to the long side. Overall, I do have a bullish bias on equities still, because the VIX is in the negative side of the scorecards. This is our main risk on, risk off trigger. When it's negative, this is bullish for stocks. When it's in the positive side, this is bearish for stocks. It's a fantastic and often leading quantitative way to form an overall bullish or bearish bias on equities. Yes, it's the US volatility index, but as the US goes, so too do most other benchmarks. So I do favor long opportunities preferably, but luxury of trading equities, we can look to the short side as well. And if I click the in play button, you can see that to the long side, we have the Russell, the SPX, the TSX, and the Dow Jones. Those are the four benchmarks I favor to the upside next week, looking for buy opportunities. And to the short side is the Kospi, the Nifty, the CAC, which is the French benchmark, and also the STOXX 50. Those are the four benchmarks I'm going to be looking for short opportunities in heading into next week. Okay, so kicking off with the number one benchmark to the upside, it's small caps. We're seeing small caps outperforming, and you can see the blue levels here is the first range for these assets. We have roughly, per market pricing, a 70% chance of staying within this range. So it means if we breach this, we have roughly a 70% chance of snapping back by the end of the week. And the gold levels here give us our larger range. In other words, we have a 95% chance of finishing the week between these levels. So if we breach them, we have a very, very high probability of snapping back. So you can look at the blue levels as being overbought or oversold during the week. And you can look at the gold levels as being extremely overbought or extremely oversold during the week. Now with small caps, you can see we're making our way to this black line. What is the black line? It's the all-time high in small caps. So I do think we're going to take out the all-time high. And if we do take out the all-time high, we'll probably move into the upper bound as well. So what I'll be looking for in small caps next week is any pullback in small caps. Ideally, I would like to see it very much like we look at in the weekly Forex forecast, which was a video put out yesterday. I'd like to see it breach the lower bound. This means it turns oversold intra-week, so during the week, and we enter the buy zone. Between this level and this level is essentially the buy zone. Once we trade into the buy zone, I'm going to be looking for momentum to fade, looking for those bullish reversal patterns. I'm going to be looking for a 1 or 2 day liquidation. If we blast through here and we go all the way through this buy zone and out the other side and we take out the 2263, this would be the second place, would also be a gap close that I would be looking for a 1 or 2 day reversal in the Russell. I do not expect it to take out this level. It rarely does, and usually it requires a catalyst, but very good place to cost average an initial losing position because the odds of a reversal increase below this level. And if we start to break down as always and we trade below the moving average, you can look for a fast market, which is basically it doesn't take out the lower bound. Instead, it breaks back up. The moving average follows it. And you can look for that bull flag setup where it hugs the moving average and then extends away into the all-time high at the 2458.86. But preferably, I'm going to be looking for this to go through to the 2478.19. This is where we enter the sell zone, but not for an initial position. I'm not looking to short the Russell, but if I'm already long and we enter this zone, that's where I'd be looking to book profits because I can only buy the Russell next week. I cannot sell it. Next is the S&P 500, and the weekly range sits between the 5874 and the 6064 roughly. So what I would like to see is I'd like to see the S&P come back down, breach this lower bound, we enter the buy zone, and I would like to see confluence. If it breaches this, we enter the buy zone and it starts to take out these lows. We're now in the buy zone at support. This would be a great place to start to look for a 1 or 2 day reversal to the upside. That's exactly what I'm looking at with members in real time throughout the week, capturing a 1 or 2 day liquidation out of 5 trading days. That is the setup we're going through in the video. It's exactly the same thing I trade during the week. If we blast through here, for whatever reason, as unexpected as it is, and we take out the 5778, this is where we become extremely oversold intra-week, and whether I'm long already or not from up here, this would be the second place I'd be looking for a 1 or 2 day reversal. Also would be a gap close in this case. And the third and final thing you can look for, because I can only be long or do nothing in this market, I cannot sell this market next week. If we make our way down towards the lower bound and instead we break back above the moving average, you can look for that bull flag setup. Usually you only get one of these during the week, sometimes two, but usually only one. And you can look for a intra-week buying opportunity where it comes back, hugs the moving average, and then moves away into the 64.61. As soon as we trade into this area, we're in the sell zone, but it's a sell in order to book profits on any longs. It's not somewhere I would be looking for an initial short position. If I'm going to short anything, it won't be the S&P from up here, it would be the Kospi or some of the weaker markets that we're going to look at in today's video. The next market I like to the upside next week is the TSX, once again the Canadian benchmark. This has been highlighted to the upside in prior videos, and often when we get a market which is outperforming or we're looking to be long, we can just ride that continuously to the upside essentially until the wheels fall off. So I'm once again looking for long opportunities in the TSX. Fantastic performing opportunity if you got involved with this from last week. I would like to see this pull back. If this market pulls back and breaches the 25066, in other words, it's lower bound or the lower end of the range for the week, we're also stair-stepping this prior kind of consolidation, which I really like. That would be a fantastic place, especially with this momentum step in. I'll be looking to buy the dip for a 1 or 2 day reversal in the TSX. If we blast through here as a backup, I'm not expecting this to happen, but if for whatever reason we get an unexpected catalyst and we take out the 24687, whether I'm long already and just cost averaging it or risk managing a losing position, or if it does that and I get an initial position, below there we become extremely oversold intra-week. It's the second place I'd be looking for a 1 or 2 day reversal. And the final thing, of course, is that kind of intra-week bull flag setup. You trade below the moving average. It doesn't quite get down to the lower bound, and then it reverses with momentum. The moving average tracks it, and it's that first pullback into the moving average that really gives you that nice bull flag opportunity into the sell zone, which is between the 25822, 2620. Again, I won't be looking to short it, but this would be a great profit taking opportunity. So you're selling anything you've bought down here in order to book profits. And the final benchmark I like to the long side is the Dow Jones. We also have really nice momentum, and again, I would like to see this primarily come back and breach the lower bound for the range next week, because then we have a market that we're looking to be long and we become oversold. The odds of it snapping back in the range are increased below the 43599. So if we do breach this, I'm going to be looking, dropping down on the lower time frames, looking for momentum to fade, looking for reversal patterns, and I'm going to be looking for a 1 or 2 day reversal to the upside. If we blast through here as a backup plan and we get a kind of A, B, and a C, again, we would probably need some kind of really bearish catalyst. But if we breach the 42903, and this would be the second place, I would be looking for a 1 or 2 day reversal to the upside. And the third and final thing, of course, if we break back down below the moving average intra-week and you kind of get this consolidation, it consolidates and then you blast back above it, you can look for that first pullback into the moving average, that bull flag setup, and a move away into the 44993.10, and anywhere between there and the 45689 is the kind of profit taking zone once we get into this area. Okay, so moving on to the global benchmarks that I like to the short side. I can only be short the Kospi next week or do nothing. I cannot buy it. What I'd like to see is I'd like to see the Kospi pulling all the way back, breaching the upper end of the range at the 2569.02. If it breaches this and trades into these highs, that would be fantastic. I'll be dropping down, looking for momentum to fade, looking for head and shoulders, double top patterns for a 1 or 2 day liquidation. If it blasts through here, as unexpected as it is, whether I'm short already or not, this would be the second place above the gold level or above the gold range that I'd be looking for a 1 or 2 day reversal. Again, I might already be short and just cost averaging it. I do that quite often and then scratching those or getting out of it for break even. But that would be the second place. And the third thing, as always, I mean, look at this. We're already above the moving average. Could very easily just see this start to break the consolidation midweek. The moving average turns. And you can look for that bear flag setup in the Kospi down to this gap close and also the 2434.01. Great profit taking target in any Kospi shorts next week. Next is the Nifty. I can either be short or do nothing. I cannot buy this market next week. We're seeing the Indian rupee quite strong, relatively speaking, and this is putting somewhat downward pressure on the benchmark because as the currency is strong, the benchmark tends to suffer. As the currency is weak, the benchmark tends to outperform. So I would like to see this breaching the upper bound here at 24238.91. If the Nifty takes out the upper bound, especially if we take out this high as well, this is going to be a place I'm going to be looking for reversal patterns next week, looking for a 1 or 2 day liquidation back inside the range. If we blast through here, again, not expected to happen, but if it does, reactively, the second place I'd be looking for a potential short, whether I'm already short or not, would be the 24602.12. As a second place, I'd be looking for momentum to slow above this level and for a 1 or 2 day liquidation back inside the gold range. And the third and final thing, of course, is look for the moving average to track up. We start to make our way, but instead of taking it out, we get the sell-off. We break down, we pull back, we test it. Here's a good example. We're trading above it. We sell off, we pull back, we hug it, and then look at the move away. That's what I'll be looking for as well. You can look for that intra-week, any kind of pullback into the moving average. That first pullback hugs it, moves away. In this case, profit-taking target to the downside in the Nifty is the 23512.48. Next is the CAC, the French benchmark. And again, I can only be short or do nothing. So what I want to see next week, I want to see preferably this gap close here. We trade above the top end of the range here, which is the 740290. If we do that, we start to get roughly a 7 out of 10 chance of snapping back inside this range by the end of the week. And so I'll be looking for a 1 or 2 day liquidation from above this range. The second thing I'll be looking for is if we blast through here for whatever reason and we take out the 7550.80, and this high as well would be great if that happened. Whether I'm short already from down here or not, this would be the second place I'd be looking for momentum to slow. Maybe we trade into this high. Now we're extremely overbought intra-week, trading into resistance. This is where I'd be looking for that 1 or 2 day reversal pattern, double top, head and shoulders, this kind of thing. Nothing that you guys wouldn't already know of, just those kind of basic reversal patterns from an overbought or extremely overbought level. And the third and final thing is you can look for the French benchmark to start to make its way back higher and then re-break lower, pull back, hug the moving average for the first time, and that sets up that really nice bear flag opportunity into the lower bound here and the bottom of the range at the 7107.11. And the fourth benchmark I like to the downside next week is the STOXX 50. If we can pull back in the STOXX 50 and breach the upper bound of the range next week at the 4888.69, we become overbought. I don't really see any highs here because this is quite deep. This is well on the way to the second one. I would probably be looking at these lows over here for potential confluence. So if we breach the 4888.69 and trade into these lows, that would be a great place to start to look for momentum to fade, for those reversal patterns for a 1 or 2 day liquidation back inside the range. If we blast through, as unexpected as it is, but it does happen occasionally, if we get some kind of catalyst, I don't think this will happen, but if it does, it's always good to be prepared. If we breach this, whether I'm short and risk managing a losing position or not, I get an initial opportunity up here. This would be the second place I'll be looking for a 1 or 2 day reversal. And as always, we've already started to break up above the moving average. So look for it to move back and then fail, sell off, moving average follows it. And it's always that first pullback into the moving average that really sets up the nice bear flag opportunity. In this case, down to the bottom of the range at the 4689.46 and the prior low. So right into these lows would be a great profit taking opportunity for any intra-week shorts in the STOXX 50 benchmark. Okay, so dropping down to the sectors then before we start to look at some individual stocks in the US stock market. And you can see sitting at the top, XLF Financials and XLY Consumer Discretionary. We're starting to see the energy sector outperforming as well. And this is not a good sign overall for the benchmarks. But as it currently stands, still bullish on equities. And to the downside, XLV, we looked at this last week, is still the #1 short sector. So we're going to go and have a look at a couple of XLV stocks as well today. And also XLRE to the downside. So these are the top 2 sectors that we're going to be looking at in today's video. These are the bottom 2 sectors we're going to be looking at in today's video to see if we can generate alpha. In other words, looking for those stocks within these sectors which are either going to outperform the sector or underperform the sector next week. And one more thing to note before we move on to the individual stocks is look at XLU. This is the most risk off sector. And when you start to see this moving up into the positive side of the scorecards, This is the internals of the stock market turning risk off. Now, again, I still think we're going to get to all-time highs in the Russell. I think we're probably going to take out the highs in the other benchmarks. But what this is telling me is, although I'm still bullish, once we start to take out those highs in the US indices, I do think we could start to see a correction take place, especially if the internals become more and more risk off. And again, we'll be tracking this in future weekly stock market forecast videos. Okay, so kicking off the individual stocks with those financials, and we're going to look first of all at Wells Fargo. This is a market highlighted in previous videos, and again, making its way higher. And once again, going into next week, I am looking for long opportunities only in this stock. If we pull back, the bottom of the weekly range, this projected weekly range, is at the 73.28. So if we breach this, especially if we breach this and we start to run in support, this is going to be a great place to start to look for momentum to fade and for a 1 or 2 day reversal. If as a backup, although it's not expected, we come all the way down to the 70.63, whether I'm already long from below this area or not, maybe this is an initial opportunity, I'm going to be looking for a 1 or 2 day reversal below here because we become extremely oversold intra-week below this level. And the third and final thing, of course, is look for that kind of bull flag setup intra-week where we pull back, we start to make our way lower, and instead of taking out the lower bound, you get the rally back above the moving average. The moving average turns and you get that initial hugging of the moving average into the upper bound of next week's projected range at the 78.56. The next bank stock we're going to look at is Morgan Stanley. Once again, I like this market to the upside. I'm only interested in buying opportunities. I can't short it. If I'm going to short any stocks, it'll be some of the weaker ones we're going to look at. So what I'd like to see here is, as always, which is my preferable setup, we come and we breach the 130.49. So we trade outside of the bottom of this range. In other words, we become oversold in a market I'm looking to be long. This is where I'm going to be dropping down and looking for reversal patterns for a 1 or 2 day liquidation to the upside. If we blast through here, as unexpected as it is, because this is a strong market, the sector's performing well, so it should, unless there's some unexpected bearish catalyst, should continue higher. If though, as a backup, we blast through and we take out the 12630, it's the second place I'd be looking for a 1 or 2 day reversal, whether I'm long already from up here or not. And the third and final thing, you can see we're already kind of moving sideways. If we continue to move back down below the moving average and then we blast with momentum, and again, it should be clear when you go up with momentum, it shouldn't be something you have to squint at. It should be clearly a run higher. The moving average follows it, and then you get a tight consolidation into it. You don't get a big sell-off again, you get a tight consolidation, and that sets up your bull flag into the profit-taking zone, which is above the 138.88 next week in Morgan Stanley. Next is Tesla. Now, this is a market we've looked at a lot to the upside. In fact, I put out a video just after the US elections to say this is a market with substantial and potential upside, and we have rallied about 40% since the election. And I am still interested in being long. And again, you know, you might say, we looked at Tesla last week, why keep looking at the same stocks? Because I'm not interested in trading a name, I'm interested in trading the stocks that are in play. The stock that is the best long or is setting up to be the most powerful trend, this is the market that I'm primarily interested in being long. And if it means trading it to the upside 4, 5, 6 weeks in a row until it starts to peter out and reverse, that's where the best opportunity is. So coming into this week, I would like to see Tesla come back, breach its lower bound, and especially if it pushes through and starts to find support here, this is where I'll be dropping down to the lower time frames in real time with GMT members during the week, looking for reversal patterns, inverse head and shoulders, double bottom, and then looking for that liquidation back inside the range for 1 or 2 days. If we blast all the way down to the 291.91, it's unlikely it's going to do this unless we get some unexpected catalyst. But if we do, this would be the second place I'll be looking for 1 or 2 day reversal. And the third and final thing is if we start to, but you can see we've already kind of done it. We broke down below the moving average, we broke up, and now look at how we've hugged and moved into it. But if we do get that opportunity and you get it again, you break above it, this is going to be the opportunity to start to look for that bull flag setup, tight consolidation into the moving average, and then a trade up to the 382.88 above the top of the range for next week. It's a great profit-taking opportunity to the upside in Tesla. The second stock I like to the upside coming into this week in the XLY sector, so consumer discretionary sector, alongside Tesla, is BKNG, so Booking.com. Now, this is a market I've been highlighting to the upside in previous videos. I've been saying to you, it's a market which is scoring very highly in the hedge dash performance metrics. And this is something that last week performed amazingly well to the upside. Look at this rally. We have the consolidation. We're looking to be long or do nothing, and we get the breakout. So going into next week, we have the momentum. I am looking for an opportunity to the upside once again. If we can pull back, and look how nice this would be. We stair step this high, which we've broken out of. We flag, because there's your flag, and we trade below the 5031.83, which is the bottom of the weekly projected range. That is going to be a great place to look for potential reversal opportunities for a 1 or 2 day reversal. If we just start to pull back into the moving average, and you trade below it, it kind of goes a bit flat, and that shows you've got a correction, and then you break back up again, you can look for the moving average to follow, and you can look for the pullback into the moving average and a move away into and above the 5322.46. Because we've already broken out, if I just clean this off, you may find, if you like your Fibonacci trades or how you like to trade these, you might find this already has got the breakout and really we're just pulling back into the moving average here. So you could look for that bull flag into the upper bound next week. Either way, I can either be long BKNG or do nothing. I cannot short this market next week. Okay, so moving on to the stocks I like the most to the downside, MRNA. And again, it doesn't mean it has to shoot straight down, but I'm only looking for short opportunities. So when I say I like it to the downside, I mean I like it for short setups. It might blast above the 45.62. It still means I'm looking to be short. So this is a market in the XLV sector. Of course, took a hammering after RFK Jr. got the head of the HHS in the US. And MRNA is one of the markets which is likely to underperform even the sector. So I would like to see this pullback. I would like to see it, as always, breach the 45.62. If it starts to trade above the top of the range next week, I'm going to start to look for reversal patterns for a 1 or 2 day liquidation. If we blast through here and we trade above the 50.13, whether I'm short from above here already or not, and I'm looking to cost average it, this would be a great place to look for a 1 or 2 day reversal as well. And the third and final thing you can look for is we start to make our way back. This becomes a big correction. And then at some point in the week, you get the momentum down, pull back, you hug the moving average, and that gives you your bear flag setup, in this case, down to the bottom of the range at the 36.59. And I would imagine we take out this low in that scenario as well. So this low in MRNA would be a great profit-taking opportunity for any intra-week shorts next week. And the second XLV stock I like next week is REGN to the downside. Very, very weak stock, underperforming the sector, and I prefer to be looking for shorts only in this market. So any pullback in this market next week and a breach of the 768.67, once we trade above the top end of this range, we become overbought intra-week and we start to trade into the sell zone. This is where I'm going to start to look for reversal patterns. So very simple stuff that I'm executing on every single week with GMT members. I'm looking for these markets primarily to trade into the buy and sell zones. And then I'm looking for reversal patterns in that overall direction. So if it blasts through here and we trade above the 79934, this would be the second place I would be looking for a potential 1 or 2 day reversal, whether I'm short from over here already or not. And the third and final thing is you can look for those intra-week breakouts which trades above it, and then you start to break back down below it. And essentially all that is this just turns into a big correction with a breakout. The moving average follows, you get a pullback, very often it tests the underside of this perhaps, and that is your bear flag opportunity into the bottom of the range at the 707.32. Okay, so wrapping up the video with 2 stocks I like to the downside, kicking off with the ticker ARE. Now, if this market continues higher, I would, as always, like to see this breaching the upper bound, entering the sell zone. I can either short it or do nothing. I cannot buy this market. So if we trade above the 112.06, I'm going to start to look for momentum to fade, and I'm going to look for those reversal patterns and see if we can get that 1 or 2 day liquidation. If we blast through here, as unexpected as it is, especially if we take out this high, and there's a low over here, so there's a nice key area of support and resistance all in the same place, this would be the second place I'd be looking for a potential 1 or 2 day short opportunity. And that's whether I'm already short from above here in this area or not, risk managing it or looking for an initial position. And the third thing is look for that intra-week bear flag breakout. In this case, we break back down below the moving average with momentum. The moving average tracks it. We pull back, we hug it, and we sell off below the bottom of the range at the 104.53, and I would imagine we'll probably take out this low if it does that. So you get that breakout, we turn into the buy zone, but again, we're not looking to buy or be long, we're looking to only buy back any potential shorts that we have. So it's a profit taking zone. And this low in this profit taking zone would be a great opportunity to put those profits in any shorts next week in ARE. And wrapping up the video then with another XLV stock, because I really do like the fact that we have the XLV sector rock bottom. I'd prefer to look for opportunities in there over XLRE, but ARE is a good ticket in XLRE. But I'm going to finish the video with TMO. Now, any pullback in TMO above the upper end of the range at the 528.07 is going to provide the opportunity, there's a little gap close there, to look for potential bearish reversal patterns, and I'm looking for a 1 or 2 day reversal out of 5. If we blast through here, and again, it's unexpected, but if we do, there's a low right over here. If we blast through here and take out the 543.05, it's the second place I'd be looking for a 1 or 2 day reversal from above this level, whether I'm already short from around here or not. And the third and final thing, as always, is I'll be looking for that pullback, intra-week breakout, back in the direction that my overall bias is. So I'm only looking for shorts or doing nothing. And then, again, you can look for the moving average. And this just becomes, again, a big correction. It's correcting. Then you get the correction breakout. You get this kind of flag and then a breakout. And then it pulls back, hugs the moving average, and you can look for those shorts down below the 498.12, which is the bottom of the range next week. And then also onto the prior low, I think is a great profit taking target sitting in that profit taking zone in TMO next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-Trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.